Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Varilek. Quietly mixed in the grains this morning. Livestock futures are leaning to the plus side. And Scott, let's talk about the grains. We'll get those out of the way first because really in a month and a quarter, and we're kind of squaring up here ahead of the reports tomorrow. And export news as far as the weekly exports didn't really give us anything to drive the market much higher, did it?
Yeah, thanks for having me. And market's acting a little bit mixed here as we do get closer to this report, but you can feel that little bit of excitement starting to grow in the grain market. And I'm excited to see a report. We're all ready to turn the page and let's start talking about our crop. So that excitement there is kind of spilling into the markets as they're starting to jostle a little bit and figure out what's the next big trade, what's the next big move. You know, I mean, all winter we were talking about, yep, we've got our old crop story, we got our new crop story, two different games, and it's a slam dunk that we're going to have a big crop. That was the expectations. And now that we get closer to what are the acres, and you see the estimate of a lower acre number on corn, 90.88, I think that's lower than what I expected for an estimate to be happening. It looks a little low in my personal opinion. So my risk is that maybe that number can be a little bit bigger than that. The crop insurance sure favors corn over soybeans is what I continue to hear. So maybe we'll see a little slant that way, but we're going to be able to turn the page from that, I think, fairly quickly. And we're gonna wrestle with what the acres are going to be all year. So this isn't going to be okay. It's set. We know what it is. I mean, by any means, it won't be that. So a lot of people looking out their window, starting to say, man, this weather is not turning around. It's a wintry mix now, wintry mix expected for Easter weekend now as they kind of pencil out some of those forecasts. So this winter keeps on giving us, not ready to go away yet. So we're probably going to have to put some of that into the market a little bit too. It's just another added story.
Yeah, so we've had a nice retracement in both corn and soybeans off the lows. We've kind of hit those 50% retracement levels, and now we're kind of into resistance again. What do we need in the reports tomorrow to get past that point, do you think, or continue that rally?
We just don't need a big catastrophic number, something that kind of blindsides you that's really off the charts. If it's kind of anywhere close to in line with these estimates, we can leave that report alone and go back to some of the other stories. So you just don't want that big outlier to happen because you do have some China sales happening and continued business there. Those stories really start to perk up, the grain markets as we see, those daily sales. Those make you feel good and make you stand a little firmer on your position if you're long. And 3 years ago, that's what got the grain markets really started, was when we were seeing daily flash sales from China, continued business because we had a weaker dollar. That's what started it. And then new stories continued to feed that bull market rally. So we just don't want a big outlier. All of a sudden we see the world ending stock number be a lot larger than expected. And suddenly why is the grain market down? Well, this world number was way out of whack. So something like that would be the thing to look at.
And of course, we get all caught up in the acreage numbers, but really quarterly stocks, hopefully they do confirm what you guys have been seeing out in the country, very tight cash basis levels for especially the corn market.
That stayed strong. I mean, especially where I'm sitting right here in Northwest Iowa, the basis was strong all winter. I think there was a lot of the end users thinking this futures market looks a little lower. I can buy what I need to get, down the road a ways, and I'm going to get a lower price to buy. And it never happened. And that's, from these end users' perspectives, it was a little tough, but we were the ethanol industry is talking about some black ink in the second quarter. They were getting a little bit of excitement, just saying, hey, we're looking at black ink coming down the road, and you see the energy start to rally. So that's another thing you can chalk off your list of, okay, ethanol margins look a little better and energies are running. So starting to feel like, hey, maybe we've got some of these stories lining up for a spring rally here.
So cattle market, 5th day up here in live cattle. Do you think we're going to retest the highs? And I know a lot of it is predicated on what cash does. And do you think we're going to be higher this week? Because everybody seems to be holding out for that.
Yeah. 5th day up. I've got 5 fingers. Guess what? I got 5 more here. We got more fingers to count these days. So yeah, we're still feeling good. The cash market feels strong. There's been a lot of frustrated cattle producers out there. I talked about the high feed prices that were higher than expected. We had the weather that we went through, so cost of gains really were grueling. Some of these closeouts, yeah, we're sitting at some high prices, and you sell fats for 165 and don't make any money. That's going to create some frustration. So you've got a little bit of a backbone growing in some of these cattle producers, in my opinion, and they're starting to line up and say, hey, I'd like to ask for some higher prices here. There's a lot of 170 asking prices in the north. I've only heard of it tripping one time so far, but early on, the upper 160s were already kind of offered. And it feels to me like the Packers are really interested in some cattle. They're short bought. We're crawling into a little bit of a hole right here as the yearlings have kind of cleaned up and the calves aren't ready yet. We're another, month away plus before we really start to, some of these earlier born calves are start to ready for the market. So feel like we've got it on our side. And I keep hearing it from Packer buyers. Hey, don't sell your cattle until you talk to me. I'm really interested in your cattle. So they're covering some miles. They're acting very interested.
No doubt. So are the funds who got out of some of their long position, a big chunk of it here when the banking crisis hit, are they reestablishing their longs? Are they coming in here? Are they what's pushing the market?
Probably slower than we'd like to see. Open interest took a pretty big hit there on that last break, as we had some bank news, outside news that really kind of sent some shivers down our spines.
Right.
But we're putting some daylight behind us in that story. So it feels like, hey, every day we can get past that, the better it's going to feel. So maybe there's a little remorse there. I hope they really do feel it and need to get back in, but it's growing slowly. The rally happened fairly quick. You did have a gap higher, so maybe some more traction yet to be had from them. And I look at the markets and say, okay, June is discount. It usually takes a little time before June realizes, okay, it's time to close that gap. Even though it's putting pretty big distance between cash and where they're at, that usually can kind of take till May. And I look at the deferred futures and say they're possibly lower than what the northern cash is. There should still be some interest from the funds that we can continue this rally and make some new highs.
Then the hogs, the funds have actually pushed to a near record short position. And boy, the last 3 days, they've been hammering that thing again. Why are they so bearish in this market, do you think?
It's to me, it's just lacking of that story that says we got to go to 105. We have to be at 110. I don't see it. We don't have the big mainstream story to lead that market to want to turn around the disease or the big business. I don't think it can stand alone and say, well, the cattle market's high, the hogs should be higher too. I don't think that's why we want to look at that hog market and think that it needs to rally. So we're seeing maybe some bigger kills than expected. There was such disease last year, and maybe it wasn't as bad this year as it was the previous year. So maybe we're seeing some increased kill more than expected, in my opinion.
Okay.
It's still got some room to go down if it really wants to. I mean, $90 was something that you had to achieve for a high, in the past, and we're still above there. So it's not like we're at some really tough prices. Yeah, it's hard on the break even a little bit, but it always doesn't take us very long to just boost that production on the hog market. And we were at $120 last year. What's that do? I mean, that's going to tell us, let's increase this production. Let's get to cranking them out. And I think that's what we're starting to see. It's quicker to happen in the hogs than it is like in the cattle market.
You bet. And Hogs and Pigs report this afternoon is expected to show a little bit of that expansion. But do you think a lot of that bearishness has already worked into this market?
I would think so. But to me, hopefully it just puts a little bit of clarity. Something we can look at and some numbers we can say, okay, where are we? Why did we break so far? And yeah, I would think some of it's priced in.
Okay, we'll see if we get any of that clarity. Thanks for joining us. That is Scott Varilek with Kooima Varilek, joining us here with Markets Now.